Hey, Mark Lund here, author of The Effective Investor, and today I want to talk about the big 20% rollover trap. Now, the big mistake I want to talk about today is how people actually move the money from their 401k to an IRA. And many people end up paying 20% of their retirement account taxes during this rollover process because they go about it the wrong way. The mistake that they make is that they let their employer write the check out to them when rolling over their money into an IRA. Yes, your employer can actually write you a check for the full amount of your 401k account, but 20% of that money will be withheld for taxes. So instead, what you need to do is called a trustee-to-trustee transfer. If you don't roll over the entire amount, the amount not rolled over is taxable, even subject to the 10% early withdrawal penalty if you're at 59.5. The 20% withholding tax requirement applies to rollovers from company plans to IRAs, but not to rollover IRAs, not to rollovers from IRAs. Nevertheless, I still advise going the direct trustee-to-trustee transfer route because you avoid the 60-day rule and the one rollover per year limitation. By doing it this way, the money never touches your hands and is the safest way to get your 401k money into an IRA. So if your employer will not do a trustee-to-trustee transfer, the next best thing is to advise them on how to make the check out when they make the distribution to you. If this is done correctly, you can still avoid the 20% withholding. A direct rollover trustee-to-trustee transfer works like this. Your employer writes a lump sum check, not to you, but to the trustee or the custodian of the IRA that you're transferring your funds into. So for example, let's say your custodian is going to be Charles Schwab and your name is John Smith. You would have your employer make the check out to Charles Schwab on behalf of John Smith IRA. This shows the IRS that your intention is to do a rollover. Charles Schwab will then cash the check into your IRA account. Almost always your employer will have a form to fill out, and this form will allow you to state the specific instructions for the distribution check. Either your company sends you the check payable to the IRA trustee without any withholding, or they will arrange a wire transfer of assets between one investment custodian and another. If you don't complete the direct rollover in 60 days, you'll be taxed on the entire amount. There's no grace periods for weekends or holidays. Well, that's it for today's show. Give me a call or send me an email if you have any questions, and have a great day.